Okay, folks, welcome back. This is the dollar index daily chart. And before we get into it, I'd like to extend my appreciation for all of you and your patience. I only had a couple people freak out and open up claims against me through PayPal. Just so you guys know, all right? I'm offended when you do that because I'm honest. If you email me and give us the time to get to your account, if it has anything to do with your access, just put urgent in the title and my staff or myself will see that and we'll jump right on top of it because I want you to be satisfied. I want you to be here happy, learning, but I'm not here trying to rob anybody of their money. The terms are clear, the costs are clear, and my service up until recently has been pretty steady. It hasn't had any issues. This recently has worried me because I like anyone else, I have an overwhelming sense of fairness. Like I want to be treated fairly, and I communicated as much as I possibly could to make everyone aware of what was going on, and it was completely out of my control. So it's been resolved, and we shouldn't have any more problems now going forward. This is our second time having a technical issue with the website going down, and for 2 days, it was not 2 full days, but 2 work days for us in the mentorship. Was a little unnerving. I haven't slept much in the last couple days, and basically putting out fires and trying to calm the new people, the new students that came in. You already came in obviously on your first month, and then you get met with the website not being functioning or letting you in and says that you're forbidden. And more people were thinking that they got canned for whatever reason. And you want to make sure that you check your email. So the email address that is used in the forum with your enrollment, I don't spam your email. I don't want to send you more emails. The forum will always send something when there's something new posted to the forum, but I personally will not send you emails to spam your folder unless it's something critical, and usually it'll be titled member update, and it is used to communicate to everyone what's going on if there's an issue. So I know a lot of you in here don't follow me on Twitter, and that's the way to find out first if there's an issue with your account. Check your email and see if there's anything from a member update email from me, and if there's nothing there, then reach out to us at innercircletrader@gmail.com and title your email urgent account access. Anything account related, put that in there and you'll get immediately ahead of everyone else in terms of your questions or your concerns. But don't use it to ask me questions like what's going on with fiber or what's going on with cable. I'm not going to answer that email. But I just want to again extend a heartfelt appreciation because this was very stressful for me the last couple of days, and I'm a person of detail. I'm a person of schedule. I like to do things when I say I'm going to do it, and I hold that in high regard, and I expect you all to understand that about me. I don't want to give anybody the impression or illusion that I don't care. I absolutely care about every single one of you, and I don't want any of you to feel like you're not being treated fairly or that you're not a high concern, because you all are. Even the people that have already paid all their money, the charter members, I'm concerned about all of you. You're my family, okay? You're an extended family or a portion of my family, and I want you all to succeed, but I don't want you to not trust me. And some of you new folks, and I understand, I haven't taken it personal, but I had 3 claims open up against me on PayPal, and prior to that, I haven't had a claim in PayPal against the mentorship at all since 2018, and there was only 2 of them then, and I won those cases too. And I only say that is because my merchant account through PayPal is very squeaky clean. It's a huge, like our rating is enormous. Like it's big in terms of people's positive response, and your payments reflect that. And the fact that there really isn't any reason for you to go to PayPal for a claim. Like if you make a mistake in your payment and you don't include the right payment note, or you don't put the payment note in there, we already will not process the account. Okay, when we get to it in the order it was received, we will absolutely take care of it and say, hey, look, in terms of you say you didn't do what you're supposed to do, we have to refund it. But when you resubmit your payment, it's going to be charging a $10. Okay, when we get to it in the order it was received, we will absolutely take care of it and say, hey, look, in terms of you say you didn't do what you're supposed to do, we have to refund it. But when you resubmit your payment, it's going to be charging a $10 service fee. That was part of the agreement now. When you sign it, that's what you pay. And if you don't make that payment, we'll ask you to send it as an additional payment. So there's no reason to worry. You don't have to go through PayPal to do a claim, because what that does, it bogs down everything. They don't have a big staff right now. And any claim that you put against me, I'm going to contest it. So to avoid all that and that drama, just reach out to me in email. If you made a mistake or if there's something wrong with the account, we will absolutely take care of it. My interest is for you to stay here and learn this, not for you to have your hands thrown up in air in frustration like the last couple of days, because believe me, as frustrated as you all felt, you can't even imagine what it was like for me, because I am obsessively compulsive, and for me not to have control, I literally lost control and went off on these people. Okay, HostGator saw the worst in me because they wouldn't respond, and they were insisting that we were being hacked from China. And I said, I have students from China, and all of these IP addresses are from my students. That's when you sign that Adobe Sign document, it records your ISP address, and then I match that and log, seeing how many times you go into the account. And if there's a discrepancy in that with the form login, then we start tracking your account. And then if there's multiple ISPs logging in, it's flagged, and you're going to get booted for abuse, sharing access and such. But I try to tell the people at HostGator, I said that we have a big group here. And anytime I tweet or anytime I go into an email and I say, okay, look, there's a new video up, whatever. The times they were saying that they were getting hit with all of this was the minute or two after me saying, okay, the video's up. So it was bogging down the CPU on their end. So when I signed up with them in 2016, they gave me a shared server. And I know you probably don't want to hear all this, but I have to do it because the obsessive nature in me has to make sure you are aware of everything, because I wouldn't know. If I was a student here, I would be like, what happened? What caused all this? So because I was on a shared server with this hosting company, and I wasn't aware that I was on a shared server, but because of our volume, my video library is enormous. And when all of you, come in there with tens of thousands of requests to go into the forum and get these links and pull from their server, it looks like a attack. Like it's coming from all over the world, and it's just like pinging it constantly. And it's just because we have grown so large that when everyone's calling on that video link to open up, it looks suspect. And their thresholds were, if you ever went over 25% of the CPU longer than 90 seconds, it would immediately throw the account into suspension. And that is what started when we had that other issue where we had another breakdown in the delivery of the website. That's what happened. Like we started to show a large CPU usage on their end. And then now, because we're way bigger than we were then, it's just like, okay, I was affecting other websites that were on that same server. Like when I was shut down, I shut that whole server down. And that's just a testimony of how many of you are in here working to get to these videos at the same time. So anyway, that's the skinny on what was going on, what took place. And I had to wait for them to trust the fact that I was giving them a log of everyone that's in our mentorship, that they were saying, okay, what about this IP address? What about this IP address? And hours of being on the phone. It was just frustrating. It's been supposedly resolved. I have my own server now, and I have twice the CPU usage. So they don't think, even if I doubled, which we know now the enrollments are closed here, it would still be able to hold and not have any kind of issues. So going forward, we should not have any more problems with the mentorship. Also, I've recently saw a lot of emails in the last, I guess, maybe 6 weeks or so. People were reporting their accounts were really, really slow with downloading the video, and it would play sporadically, okay, and then would stop or buffer a lot. That should also be resolved with this too. So at the time, I was reporting everyone in an email that it was probably on their end with their own personal IP address, or not IP address, but their own internet service provider. But it has since been revealed to me that we were just bogging down their server. So it was everybody at the same time trying to pull these videos, and it just, it is what it is. And I'm trying to explain to you as best I can to put your mind at ease. So that way there shouldn't be any discomfort going forward. Let's put it that way. All right. So anyway, with all that said, again, thank you very, very much. There was only a couple people that gave us a little bit of a headache, but we resolved those. And again, trust me, folks. Okay, I'm working very, very hard to give you the best in terms of information, content, concepts, analysis, learning, development, resources. I'm working very hard for that. And you just got to trust me. Okay, I'm not gonna let you fail. I'm not going to, because if you fail, I fail, and I just don't like doing that. I refuse to do it. So just stick to the process, keep going forward, and you'll find yourself exactly where you want to be. Now, with all that preamble, please don't send me an email and say, please make a separate video in the future for this, because I have to address it with everyone. All right. So now we're looking at the dollar index. This is a daily chart. And I shared on the forum, because I couldn't do any video work, the low on this candle and the high on this candle, extending that out in time. You can see we went to consequent encroachment on that fair value gap, and we spiked up into it here on, what is that, Tuesday. So yeah, we have today's Thursday, Wednesday, Tuesday. Apologize because I'm a little scatterbrained, so I'm going to try to keep it very, very short, because I don't trust my focus right now. So we'll go into a little bit more detail tomorrow. I'm going to try to get some sleep tonight, but we spiked up into it. We'll see this on the lower time frame. We came down into the volume imbalance, went a little bit through it, but when we go into the lower time frames, you'll see there's some really interesting things there as well. I don't know, okay? I don't know if we're going to move out of this range above or below. We're doing pretty much what I said a couple weeks ago. We're just going sideways. Now, I said on Twitter that I would talk about how I forecasted this very environment that we're looking at for the dollar index, and really for the market as a whole, because if you look at the bond market, okay, and the bond market on TradingView, if you go up to your symbol box up here, for this symbol for the dollar index, I use DXY, and when that opens up, it gives you I'll show you real quick. It won't show you this, the box itself. It just shows you there. This is the one I use here for the US dollar index. I don't use this or anything like that. I use this one. So when you pull up the bond market, you're going to put in letter Z, B, U, 2020. Okay, and it's basically this one. Okay, what that is ZB is the Treasury bond futures symbol. The U is your contract delivery month for September, and the year is obvious 2020, which we can't get through fast enough. If you click on that, and we scrunch up a little bit because it doesn't look like anything there, you can see what's going on. Interest rates are flat. They're not doing anything. They're not moving around. There's no gyration, and that's the reason why I was calling for that stagnation in the dollar index, and we would go sideways. If the bond markets aren't moving around, that's why we saw like this little movement here and then movement here. You'll find that the trades that were nice on the short term for the foreign exchange and dollar, it was all linked to these two little price movements here. Everything else is back inside this range. Until the bond markets come out of this range and start moving, and I don't care if it goes higher or lower. It's hard to see it going higher because we're going into potentially negative interest rates if it does that. So that causes all kinds of interesting things in the commodity market, which I've hinted at today, that we're moving into mega trade conditions for commodities, especially if we get a collapse on the dollar. And if we go down deep in the dollar, which, man, anything can happen this year. Like, I'm not holding anything up as a impossibility. Like, there is so many things coming at us this year. You know, if you look at the World Economic Forum, you can go to the YouTube channel and look that up and look at the Great Reset. And, you know, they're basically just putting it in our face now that they want a global reset. You know, they're trying to get everybody on board with it. So if it gets too bad, you know, everybody's going to be like, man, let's just do it. And I don't think they understand what that means. And that is going to cause all kinds of chaos in the marketplace, which is awesome. Like, that is awesome. We're going to have so many moves happening with that. They'll be sudden at first, but you'll have so many moves that literally will be like candy falling like manna. Okay, it's going to be unbelievable. But even if it doesn't happen, okay, if that doesn't happen, we're just basically waiting for this environment here on the bond market to change. Now, it may stay in this trading range in tight, narrow consolidation the entire time that the September or the ZBU 2020 contract, when it expires, it would go to ZB, letter Z as in zipper, for the December contract. So December's contract may actually be the one where we see the moves really start to, you know, take place. But the real secret recipe, or the sauce, if you will, that's the little thing everybody looks for on Twitter now, the sauce. It's this. A long time ago, I taught every one of you that are back in the old days when I came out just focusing on foreign exchange on baby pips. I said the interest rates are the secret. Okay, if you don't understand the interest rates, you're not going to understand the markets. You won't know when the big moves are going to happen. You don't know when the high probability conditions are there, when it's low probability. This is low probability. Why? Because it's putting a stranglehold on the marketplace, because no one's chasing yield because they know yield is locked up. Think about that. Interest rates are frozen. They're not really doing anything. They don't know what to do. Think about that. Banks are not moving anything right now. So everything's going into a coil or a small, narrow consolidation. And that is good. That is so good. Because when it does these types of things like this, when it's released, there's so much energy, and everybody that's been sitting on the sidelines waiting to put money at work, they're going to throw it at it. And it's just going to make these moves enormous. They're going to have so much volatility. It's going to be so easy to see trades and reach for objectives, and there's going to be lots of them. Lots of them. Remember back in the day, if you've been following foreign exchange for a while, I didn't want this video to be long because I'm tired, but I'm getting excited. You can hear I'm getting a second wind. I don't know what year it was. I can't think of it off the top of my head because I'm scatterbrained, but we used to have like 300-400 pip days in like pound yen and euro yen, and it would just be like easy money. It was so big of daily ranges and so many opportunities. And with a 1 minute chart, you could get like 12 trades inside the same day. It was amazing. That's the type of environment that we're going to see when this thing finally releases. Okay, so just know that, keep reflecting back to the bond market. Okay, when you start seeing a big displacement up or down, you know we're going to get ready to start seeing really nice short-term one-shot, one-kill scenarios again. But until this breaks out of this, it's going to be a real drain on volatility, and not really a drain. It's going to be a stranglehold on volatility. And it's going to be real hard for the dollar to move. It's going to be real hard for the foreign currencies to move. And they're going to have like a scalpers, day traders model. And it's frustrating for some of you that want one shot, one kill, that want a swing trade, that want a short-term trade. But you got to take basically what the market's going to give you, and you have to submit to it. And one of the things, and this is why I'm teaching this now, because otherwise this would be in a charter lesson somewhere. I want you to understand the underpinnings of the market, why it is doing what it's doing. Why is it hard for the market to move around? Because this market right here steers everything. Everything. It does not matter. If it's a currency, it's going to be affected by the bond market. Period. End of story. Done. Now, a better, closer gauge would be to follow the 10-year. So while we're in this consolidation like this, come back to this every day, but you also want to look at the 10-year note. The 10-year is symbol Z as in zipper, N for Nancy, 10-year T-note futures. Click on that. Again, delivery contract month is U for September, and then the Z is for December. So you have to watch these two here. I think we'll have a release between the September delivery contract or the December contract, but for any measure of discussion, we're just going to focus on the September contract. And you can see we're really, really tight there as well. So we'll see what happens. And if there's any displacement in this one, it's going to be a more closer representation of what we should expect in the currency markets. The 30 years a little far out, 10 years a little bit more sensitive to what would be seen for like right now. You can look at the 5-year notes, but they're kind of spotty. I only look at it for like the bond triad, or interest rate triad. Looking at the 30, 10, and 5 for divergence, or SMT. But right now, don't even look for SMT. Now that I mentioned that, like, don't look at the bonds while it's in here like that, because it's going to be distorted. Everything right now is locked up, and until they release this, the markets are going to be very, very stagnant, and that's okay. It's not okay for people that want to trade a lot or give me system setups and I want to see a model do this and do that. Focus on a 5 and 15-minute chart using an hourly chart, and you'll find setups. But try not to demand more than that while we are in this environment. So hopefully this makes sense. If it doesn't make sense to you, I promise we'll cover more of this as we go along in this environment. If we break out of it and it looks like it's done something, then obviously I'll bring it to your attention too. But anyway, getting back to dollar index. This is already a really long video. All right, let's zoom in here a little bit. And we have the fair value gap in the form of a BISI, buy side imbalance, sell side inefficiency between this candle's high and this candle's low. That's these two red lines in here. Okay, and we're working inside that again. We traded back down almost to the discount end of it here, but we went to the volume imbalance, traded inside the bullish order block there. And I want to see, like, I guess my gut, my personal wants and wishes, and my will, if I can say it like that, wants to see this thing go higher. Like, I want to see it do that, because it would make sense to do that. When we look at the other foreign currencies, you'll see why. But in here, we'll take this information and drop down into the hourly chart. All right, so here's the hourly chart on the dollar index, and you can see right away the volume imbalance, those two blue lines that we transposed from the daily down into the 1 hour chart. And look at the sensitivity when it went right back to the top of the premium end of that buy side imbalance, sell side inefficiency on the daily chart. And we didn't get down to the lower end, but we traded lower into this fair value gap right in here. Now, I'm not going to put these levels on here. You can do that on your own chart. It comes into it here. We rally up and then come back down into the order block within the volume imbalance. Then we have displacement, and this is during the New York session, and trades right up into the premium end of that buy side imbalance, sell side inefficiency. So again, go back to the daily chart and you'll see these two red lines. That's what's being shown here. Think about how this is acting as real support and resistance. Okay, it acts as a level to reach for, because while the market's in consolidation, even though that other schools of thought about imbalances would say, okay, it's filled, that one's done, it ain't done here. We use them for reference, especially if they're higher time frame, and daily is higher time frame. So it's a level that we can see and appreciate. We have a volume imbalance in here, which is an absence of any bodies. The wicks and tails, okay, are the only thing that's in here. We traded up into that. I like how we almost came back up in here and touched the fair value gap there, but we did in fact show, look at the bodies of this here, really nice. Trades into that, we break down, market structure break. In here, right in here, you'll see on the 15-minute time frame a little bit more detail, but we have a break in here, rebalance to the premium end, of that buy side and bound sell side efficiency on the daily chart. And I want to see it just drive above and get above here. Now, everyone else would see this high, this lower high, and it may be a potential continuation, like it's making one of those downtrending channels that I used to look for when I first started back in the 90s. It's so easy. All I got to do is draw these lines on here, and you can see it. It's here, 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 and then here, here, and extend it out. It's just walking down that supposed channel. To me, it just makes sense to upset that and just bust right on through that and make an attempt to run above this buy side liquidity, because it looks like they're trying to build a narrative that the dollar's going lower, and it just might not be doing that. And I don't want to hold a hard opinion about anything, but again, I have to co-sign with something every time I talk to you. So I believe that it would be more, I guess, suitable for the dollar to reject all this and just go higher and run the buy side liquidity and maybe reach up into the 98s. That's what I would like to see happen. Will it happen? Probably not. Tomorrow's a bank holiday in the U.S., and so we're moving towards 4th of July holiday, and this whole week has been 4th of July volume, and it typically this week creates a very short-term high in the stock market. I think that we're going to go a little bit higher on S&P still. I gave you guys 3160. We'll look at S&P tomorrow, but for right now, just know that historically, if you look at the first and second week of July every year, there's always either a short-term high in equities or it's more or less a consolidation period where it just goes quiet. And it's the summer doldrums. A lot of money starts to sit on the sidelines, and now because of everything that's going on in the world, COVID-19 related, it's just more reason for it to be sitting on the sidelines parked, because they don't want to assume any risk. Large funds are sitting with a lot of money on hand. They're not allocating a lot of funds because of the underlying risk that's available right now. No one wants to take that risk. So that's also why the markets are consolidating and tightening up, and why the bond market won't move. There's no chasing of yield, which is astonishing. Like it's amazing what's going on in the marketplace. It doesn't mean the markets are broken. It doesn't mean that the stuff's going to stop working. It just means that you have to pay attention. You have to have your ear on the rail. Okay, you can hear the train coming if you put your ear on the rail, but if you're facing the wrong direction, you can't see it coming. It'll run over your head. So what am I saying there? We're waiting for volatility to return. When it does, it's going to last for a while. It's going to last for a long time because of all of the pent up energy of everyone wanting to make money and put their money at work. When it starts to move, everyone's going to be like, yes, and it's going to be like the casino doors are opening up and everybody's in for business. So we're going to look at the 15-minute time frame. All right, and here's the New York session, which is 8:30 to 11. We're sticking with that because I'm going to kind of like beat that into the ground. I got an email asking, is 8:30 to 11 more reliable than our typical 7 to 9 o'clock in the morning New York kill zone? It's not that it's reliable. It's just I gave the public on YouTube just a real generic time frame to look for the optimal trade entry. And it's real easy to find it when it's like that, because I'm giving you basically all the way to London close and 8:30 in the morning when the news comes out. But there's going to be times when the moves will happen at 7 o'clock, maybe at 6 o'clock in the morning. It'll be a little bit ahead of the 8:30 news embargo lifting. So just, I guess, study it and see if you'd like to use the 8:30 to 11. I mean, there's no real advantages over one or the other. I mean, this one here just makes it really simple, because otherwise you're met with 7 to 9 for New York open, and then you have London close, which is essentially 10 o'clock in the morning to 12. So really, what is it? Well, to remove all of that confusion and cut down on all the emails I get anyway, because there's a lot of you in the mentorship, but I still get a lot of emails outside of mentorship from the things that they watch on YouTube. So to cut down on that, I just made it very easy to not work with New York open or London close kill zones, and just make this all-encompassing 8:30 to 11. And to be honest with you, a lot of you actually like this one in mentorship. I got a lot of feedback that were positive, but I know I got a member that asked, is there basically an advantage over this versus our New York Open. There isn't really an advantage except for it just simplifies when the setup will form and be willing to wait as long as 11 o'clock in the morning. So hopefully that answered your question. But we had a nice reaction here on non-farm payroll. The market rallied up, created an imbalance in here. Buy side imbalance, sell side inefficiency. Trades back down into the down close candle. Not this one. This one. Why? This is the big beefy candle. This is all stop running. This is all rebalancing all of this and reaching into this order block. But this run here is going into this order block. Okay, so not this tail. Never use the candle to have these tails or long wicked for looking at bearish order blocks. This is a bullish order block here. We don't look at this. We ignore this move here because it's already done its business, clearing this up and running stops below the relative equal lows. So ignore this. This is one of the hardest things you're going to learn from me because it's an experience thing. Okay, there are rules to it, but we don't need this long wick or long tail candle to give us any kind of narrative because the narrative is already here. And if you dismiss all of this, say this tail didn't even occur, fine, because we have the imbalance here. It takes us to this order block, so it trades down into the order block, closes in the imbalance here, sets the stage for optimal trade entry, and runs to the top of the daily BISI. Beautiful. Rebalances to here. Volume imbalance is finished, and we trade up into the breaker. High, low in between, higher high, down close candles. That makes your bearish breaker, and it trades up into that with the daily BISI. So from here to here, that is a high probability short-term scalp. Now, it's not high probability for me personally because it's in the context of non-farm payroll. But if you remove that element to it and you see these types of things occur, then it's high probability. Now, some of you say, well, what if I want to call it non-farm payroll high probability if it does this? Well, that's on you. I'm just giving you my perspective because you're paying me to give you my opinion, and that's my opinion. Even though I can see a lot of non-farm payroll setups, I'm just not willing to go out there and do them because I can be wrong. And chances are the times I put live funds behind that, I'm going to be losing and I'm going to regret it because I know better. I've done this long enough to know that I have lost more money trading non-farm payroll than making money on those days. So let that sink in. All right, so let's go over to the euro dollar. All right, so here's a euro on the daily, and there's a little bit of clutter in here. Let me take this off for a moment so you can get some visibility. So now, thinking about what we have here, I would like to see the euro. Now, everyone sees this big bull flag, okay? And could it be valid? Yeah, but it depends on the dollar breaking down. If the dollar goes up and breaks that downtrending channel that retail sees, that I was outlining on the dollar, that would send this lower. I really like the equal lows here and the fair value gap in here, which you'll see when I add back the annotations. I think it's gonna, if it goes lower, and if I'm right about this, and I don't have a lot of confidence in this because of what I've outlined on the bond market. We're stagnant. I'm basically trying to predict what I teach you not to do. Okay, we're not trying to predict the direction of the breakout. We're not trying to do that. We're waiting for the banks to cause a displacement where the market runs higher or lower. That movement will set the stage for all of the future moves and rebalance and expansion. But while it's like this is absolutely a gamble. So I want you to understand that. So if I'm telling you what I think might happen, all that is a guess at this moment. There's nothing statistically behind what I'm saying. It's just I have to give you what I think might happen. But I'm also adding to it, don't trade on this. Okay? There's times where I'm right on and I feel confident. I think it's going to go here. This. Right now, I want you to understand the distinction between when I'm telling you what I think is going to happen and it happens. This is one of those times where I absolutely am not confident, but I have to pick a side because that's what you pay me for. I think that the euro dollar makes sense dropping down below these relative equal lows, closing in this fair value gap, and maybe trading back up into this area here, which would be mitigation, and then expand down and close in this area here. So that'll make a little bit more sense when I add the lipstick back on the chart. And there you go. Okay, so all of these details we'll see when we get to the lower time frame. But right now, on a longer term basis, if I can see the dollar gain against what everybody else is betting against, they want to see the dollar collapse. I just think the Fed's going to say middle finger and descend it higher. And this might be where they take the euro dollar, which is basically 110.50-ish, which would be basically consequent encroachment of that gap. Now, it looks like there's a big wick here because of the box. And again, I'll toggle it off so you can see it. It's just this single candle creating that buy side imbalance, sell side inefficiency. So it's this candle's high, this candle's low, that range, and then split that in half. That's consequent encroachment. It's about midpoint. And it's basically the 1050 level. I wish there was some real clear visibility, because I would love to be short here and add more as we were dropping to get down into that 1050, because that would be really nice. But I just don't have the confidence to do that. So I want to be as honest as I possibly can. If I have things that don't make sense and it's not very clear, I'm going to justify my opinion and tell you what I believe might happen. But I have to basically balance and measure that with ample warnings, because I don't want any of you to misunderstand what I'm saying. I'm not saying that this is absolutely going to drop down to here. I don't know, but I would see in the chart, based on what's there and what I've shown in the bond market and what I've shown in the dollar index, how it could upset sentiment. And this looks too obvious as a bull flag, and that would be a big move. I mean, that takes us way above this, if that's in fact what it is. I just don't have the faith in that. And there's really nothing in the underlying pinnings with the bond market being held in captivity like it is. Interest rates aren't moving. I just can't imagine the euro dollar driving up there. I just can't see it right here. Now, it can make me look stupid and do it, but that's okay, because then I'll have all kinds of range to work in when it does that. I don't care. I'm not trying to predict the breakout. We wait for smart money, which is the central banks, to reprice in a displacement. A big move out of this range, I don't care which direction. When it does, we'll have salad days again, easy trades. But right now, it's very, very difficult for you to sit still and wait, and I understand. But I've gone through great lengths in this video, now 40 minutes into this, explaining why you need to sit still and kind of squash that internal hyper turbo, I want to go out and do something right now, and expecting big moves. We're not likely to have that. Okay, and even though I'm outlining what could potentially happen, I don't see that happening in one day. So it's a matter of, if it starts to break down, fine, we can go back to this area here in mitigation, and then it would open up a range between that area down to here. I'd feel comfortable trading that and allowing and letting the smart money get in here and get short ahead of me. I don't care. I'm not trying to pick the tops and the bottoms, and I'm not trying to break out. Okay, I'm not trying to do that. I want them to show me clearly what they want to do, and it gives me visibility, which I don't have right now. So I hope you understand and appreciate what I'm doing here, because it sounds like a whole lot of mumbo jumbo if you're month one. But people that have been here for a while, it's like it should be good medicine. Oh yeah, it's not what I want to hear. It's not exciting, but it's making things make sense. So that way, in the future, when you don't have me talking to you on a weekly basis and you're doing this all by yourself, you're going to remember these lessons, because it's going to basically rein in your impulses to trade a lot and dial back your expectations to, okay, maybe 10 and 15 pips isn't really that bad of an idea, and get out above previous short-term highs and get out below previous short-term lows, and be content with that, and don't expect and fear missing out a big run, because look what's happened this week. There hasn't been a whole lot of big runs. There's been moves, yes, but we haven't had these big, long, extrapolated one-directional moves. It's back and forth, and that's what I've been trying to communicate to everyone. So hopefully that's provide a little bit more clarity to why I've held the mentality and stance I've had on the market, and why also I was so far correct in terms of calling this sustained consolidation, because it's still going. Let's drop down to an hourly chart. All right, so here we have these relative equal highs. This is where I went short on euro. We ran below these relative equal lows, really punched through that nicely. An expansion back above. I mentioned studying these lows in here and how we could potentially go down a little bit lower. I wanted it to go a little bit lower than it did here. So while it does offer targets to be fulfilled when being short from up here or over here, it just really didn't give me an opportunity to wash out enough of the sell side liquidity, in my opinion. But here's the kicker. We came back up above this high with this run. We came back above this high with this run. And now this high and this high has been taken out here. And then we have non-farm payroll today, which classically in a normal market environment, not like we have one now, but in normal market environments, non-farm payroll typically creates like a Judah swing for the month. So whatever you think you're seeing in the marketplace ahead of non-farm delivers the underlying first couple weeks of trading for the month. And if you study that and dig into it, you'll readily see right away what I'm talking about. And spend time with it. Don't just go in there tonight and then start sending me emails. I don't see what you're looking for. Okay. Trust me, we cover more of that stuff in the content. But nonetheless, we have a bearish order block, which is these 3 consecutive up close candles. Small little fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. Didn't quite fill it in here. Okay, didn't quite fill it in, and we have relative equal highs. So we have buy side liquidity there, and we came all the way up to this point here and then broke. When you see lower time frames, you'll see the market structure being broken in here. Come back up, and again, displacement, fair value gap on the 15. You'll see it's beautiful, and then runs back down into this BISI, buy side imbalance, sell side inefficiency, and the beginning of all the down close candles, which is a bullish order block. Low, run on stops. I think it's too shallow personally, and I think that as much as that daily bullish bull flag was being discussed and showing how it looks like a classic big bull flag, I trust this as a bear flag because I think we're going to go a little bit deeper than this one. So couple that with what I outlined on the dollar, because that downtrending channel that retail would see. If I was making the market for the dollar, I'd blow through that and just crush all of them. And it would be basically upsetting everyone's expectation on the dollar. If you go through YouTube, everybody's, the dollar's going to collapse. The dollar's getting replaced with the digital dollar. We're all going to go to global reset. Everything's going to crash. Everything this and everything that, and buy crypto and buy gold and do this, and it's just too much sentiment for the dollar to crash. So if I'm making that market, guess what I'm doing? I'm sending it. It's going higher. And I'm taking it back above $1. That's what I would personally do, and just completely ramrod everything, which would create all kinds of volatility. Great. But I think that this in here, we may come up in here, fill in this. So watch this area here. There's a small little SIBI in there. So let me put that line on. Not that one. I apologize if this video is a little longer than you were hoping, but I have not been able to talk to you for a couple of days, and I also want to answer a lot of email questions and all this, and also give you a lot of context of what it is I've been seeing that causes me to have the apprehension about what the market is doing and why I don't think it's going to do anything until it does what I've outlined in this video so far. So it can come back up in here, rebalance here, and that sets the stage for another drive lower and dig in deeper below here. And we had that sell side liquidity pool over here that I'm not going to extend these lines, but remember, these are the levels we talked about in the last video, and actually is in the charts that I posted yesterday or day before. I can't remember. My head's scrambled right now, but I think 111.60, 111.55, maybe even down to 111.50 could be doable by next week. We could see a sharp decline tomorrow if we get in here, an overnight drop down. If we get below here, I think it's going to accelerate down into here. And in how we trade here, it might go below these levels. Okay, and you want to go back to the daily chart to see what these are. And we may go below it and then come back up into it. So watch the discount end or the consequent encroachment of that. That might be another area that it'll pick up more shorts and then drive down into the 110s. So again, that's assuming everything I said here, which is highly improbable. It's probably not going to happen, so please don't bet money on this, okay? But I have to give you what I think personally, or what I expect to see, what I'd like to see as a speculator, that's what I'd like to see. That's the setup I would trust, and where those those setups would form. Let's drop down into a 15-minute time frame and wrap up on euro. All right, so here is euro. Look how pretty that is. It was ugly for a second, wasn't it? So we trade up into the bearish order block and above the relative equal highs, and we break down, short-term low, broken. We don't need it to close below, and then rebalance, fair value gap, right in here. And what's it trading to? Rejection block. See the closing price on here? 1.1297.5, and this high goes to 1.1297.5. Rejection block. Perfect. You can't get any better than that. Rejects it, trades lower, rebalances, trades to a short-term low here, and the final portion that creates this little fair value gap right in here. Look at your own charts on this little portion here, and go down to the 5-minute chart. You'll see a little bit clearer too, which we won't do here. It trades down to that low, completely rebalances all of this SIBI, sell side imbalance, buy side inefficiency, and trading up into the bearish order block right here, right? With the big wick? No. The big beefy bullish candle here. It's more stout. Okay, that's what you want. And that's what it's trading up into. Mean threshold, bam, hits it, rejects, and goes lower. Below here you have what? Sell side liquidity. And what's over here? Relative equal lows. This low being higher than this one, so that sets the stage for what? A very easy low resistance liquidity run. Optimal trade entry, short, sell it, sell side liquidity here, and sell side liquidity here. So this candle's low here comes in at 112.43, and 2 pipettes, we'll just call it 43. 10 pips below that would be 12.33, and the low here comes in at 20 pips lower at 112.23. So it went 20 pips below this low here, there, and then we're stagnating again. So watch this imbalance right in here. We might just trade up into this high a little bit, maybe consequent encroachment there, and then I would expect to see it trade down again and get below here. That's what I'd like to see, because it looks like it's got all kinds of narrative in here where everyone is getting knocked out. So every time it starts to drop down, buy side liquidity is building above the short-term highs, like it does here and here and here. So it's coming back multiple times. Every time someone tries to get short, they knock them out. Why are they doing that? In my mind, it just justifies that rise in the dollar, and they're going to send this to 10.50, 110.50. And they don't want anybody riding the 200 pip or 2 penny slide that's probably going to happen in euro. That's my expectation. That's what makes sense to me. Am I putting a trade on tomorrow to do it? No. Okay, I'm not. So that way you understand and weigh it out. But that's what I'm subscribing to and what I'm co-signing for going forward until something else changes my mind. So let's go to cable and wrap this video up. All right, so here is cable. This is our daily chart. You can see we are still inside that consolidation. And even though we have a group of lows here, we rated that and we traded back up pretty nicely. I just like these lows over here in this BISI. So in this area here, let me put another line on it. There you go. It's not the colors I want to use, but it is what it is. So we have this in here, consequent encroachment, midpoint of that gap between this candle's low, this candle's high. Split that in half, and that would take it below here. And that's where I'm looking for cable. And again, it would make no sense otherwise linking it to the dollar index analysis. Like I was saying, I'd like to see it go higher and just disrupt all the sentiment. This currency may resist going lower. I think euro has a better chance of going down than this currency has a better chance of going down, at least for right now, unless something changes, in trading tomorrow. So it doesn't have a whole lot of probability in here, but to me, I like this eventually being traded and filled in, and especially running below here to consequent encroachment of the range high and low that makes this buy side imbalance, sell side inefficiency. Dropping down to an hourly chart, moving right along. All right, so we have, again, look at this here. That to me is like juicy. And I'd like to see this become a market maker sell model, which it could potentially be. It could potentially deliver that. But the sell side liquidity resting below here, I think that is delicious. And if we can get down to that, that'd be nice. But again, much like I mentioned in the euro, we're talking about potentially 2 pennies or 200 pips slide lower in euro. If my analysis is right and they upset the market by sending the dollar higher, this also would basically give us a 2 penny or 200 pip move from these heights down to here. And to me, it just would make sense to do that because no one's expecting it. No one sees it coming, and nothing in here justifies that idea except for what I'm showing you here. And I'm not trying to hard sell you that I'm right, because I'm probably going to be wrong. But again, gun to my head, what side am I picking? This is what I'm outlining. So we have several imbalances here. We have the BISI here, and we have a BISI here, and then sell side liquidity resting below here. Again, with the real nice signature of the higher low to the right than the one to the left. So again, if this thing starts to break down, all you have to do is look at all the down close candles over here and match that up once we start to break down. When it trades back up into that, that's going to line up with all of the potential buy side of the curve now acting as the sell side of the curve and driving us down below here. So that's what I'm anticipating. That's what I'm expecting to see. I'm not putting money on it, folks. So just so you know. Well, if you think that, Michael, why aren't you doing it? Because it's a holiday. And honestly, I'm frazzled right now. I'm a human being. I'm not an AI. And the last 2 days have completely stressed me out. And I need a couple days away from that now. So in the 15-minute time frame, it comes a little bit clearer in here with the fair value gap there. We have a small one in there, but I think if it's going there, it's really going to take out the equal lows there, and then we have relative equal lows here on a lower time frame. 5-minute chart would look really close to something like this in here. Nice fair value gap below this. So that, to me, we might get down to that and then get a reaction that sends the market up again for another level of selling. I'm forecasting right now, so I'm just giving you an idea of what to anticipate should it get there. And then we have a fair value gap in here, and then again, low, higher low, sell side liquidity pool resting below there. Everyone else sees an uptrend. Okay, everyone sees all these really nice buy the dips. And to me, if I was making the market, I'd upset all that and send it immediately below here, because low, all the way up in here, they're looking to try to capitalize on getting long more, and they're all thirsty for it. And I don't think that's going to happen. I think they're going to try to take it down here. That's my personal opinion, and I'm going to stick to it. So this is going to be the end of this video. I just want to again thank you for your patience. I will give you another video review tomorrow. Don't expect a whole lot. Just going to be like a daily review, and then I'm going to take Saturday off and rest. And Sunday I will do the weekend edition commentary for what I think may happen based on tomorrow's activity. Okay, have yourself a pleasant evening, pleasant day, whatever. I probably am going to be quiet on Twitter tomorrow too, because I'm going to try to really get as much sleep as I possibly can. And until I talk to you tomorrow by way of the daily upload, I wish you good luck and good trading.
Yeah.